Hello guys, welcome back to Rally Top Academy. All right, Rally Top Academy used to be known and called Rally Top Investing until some hackers hacked into our social media platform, particularly our YouTube channel, all right, and completely hijacked it. They also took over our email account and changed the Gmail account, change the password, change our phone number, adopted our logo as their own logo, all right, and started uploading some strange videos, all right, on our YouTube channel, which have no our signature in it, all right. And immediately this happened, okay, YouTube and Google were alerted, all right. And in order to mitigate the havoc that the hackers were doing on our YouTube channel, YouTube had to terminate the channel. All right. Now, let it be on record that YouTube did not terminate the channel as a result of our breaking the community rules of YouTube. We have never violated the community rules of YouTube ever since we came into being as Rally Top Investing. All right. Now we have not even received a warning, we haven't received from YouTube before. All right. YouTube terminated that channel in order to mitigate the havoc that the hackers were doing. All right. Now, let me say that YouTube has been very helpful. They have been very, very helpful. They have been very open to us, and investigations are ongoing, all right, to determine the true ownership of that channel, okay. And we hope that at the end of the day, we'll be able to recover back our channel and our email accounts, okay. But let me say this, that what the hackers have done is simply to push us to become more stronger, I meant to say to become stronger and better, all right, because we are going to dish out more valuable contents to you guys out there who have been loyal to us all this time, all right. We'll be more committed to satisfying your needs in the market, all right, and we give to you more valuable contents. You can rest assured, you can rely on us for that. We promise you, it's a promise, all right. Now, in when the whole saga happened, well, we took a step backward and reorganized everything, all right. Therefore, effective October 10, 2022, we are going to start, today being the 10th of October, we are starting off our free masterclass video series program, all right. If you remember, when we were running Rally Top Investing, okay, we were having our free masterclass quarterly. But now, from today, 10th of October 2022, we are going to be dropping videos every week, all right, on our free masterclass video series program, okay. It's going to be a wow moment for you. Please stick to us, or stick with us. Invite your friends, share this video with your friends and family members. Invite your friends to join us, all right, because you have lots of valuable contents coming your way right from today, okay. So please, I want to say this, subscribe to us. I know we have lots and lots of subscribers on our YouTube channel, Rally Top Investing, when we're running that Rally Top Investing, all right. But now, as it stands, we have no control over the Rally Top Investing YouTube platform for now, and therefore I want to appeal to all our esteemed subscribers. Please unsubscribe from Rally Top Investing YouTube channel. We are no more in charge of that platform. Unsubscribe. Do not allow yourself to be scammed by anyone purportedly to be Rally Top Investing. We do not have control over Rally Top Investing YouTube platform anymore. So please unsubscribe and subscribe to this very new platform, which is Rally Top Academy. Okay, please subscribe to us. Okay, so invite your friends to also subscribe. All right, now you need to turn on your notification bell so that anytime we drop a new video, you'll be the first to be notified. All right, and if you like the content we want to share with you today, please give us a like. All right, we need that. Give us a thumbs up. We need it. All right, it doesn't cost you anything. Okay, you have been doing that in the past. Please continue to support us. Okay, guys, with that being said, and one more thing, guys, as part of our reorganization, now effective today, our Telegram group will be officially shut down. All right, a new Telegram channel has been created. Okay, link in the description below. A new channel has been created. So we are appealing to our esteemed members who were on this Telegram group to please switch to the new channel. And we also want to ask the public to please, those who have not who have not joined our former Telegram group, to please take advantage of this and join our new Telegram channel. All right, link in the description. Okay, now if you need traders interaction, there is a platform that you can take advantage of, and that is our Discord server. All right, there you will find other traders that you can interact freely with. All right, now link is also in the description, so please check it out and join those platforms. With that being said, let's jump right into our discussion. Now, this is the first video, all right, in our free masterclass video series, meaning that this is series number 1, okay, and it's titled Market Structure Part 1. Now, in today's video, I want to teach you the objective way to mark or to map your structure in the market and never to be on the wrong side of the market anymore. All right, I'm going to teach you that today. But what we are going to be looking at today is the basic market structure. All right, basic market structure, and that's why I name it Market Structure Part 1. By the time we get to Part 2, which is next week, your eyes will open. All right, it will be a wow moment for you. Now, let me say this: you don't need indicators to be able to map your structures correctly. You don't need any EA to show you which is higher high, higher low. You don't need all that. All you need is your eyes and your horizontal lines. That's all. As simple as that. Now, let me start by showing you this diagram, this small diagram on my right. Okay? Now, I'm going to show you 2 characteristics of a trending market. As you know, we have 3 principal types of structures. We have the bullish structure, we have the bearish structure, and we also have the consolidation market. All right, but for now, I don't want you to concentrate on the consolidation market. All right, when we get to that bridge we cross, I tell you why. Now, I want you for now to concentrate on the trending markets, which is bullish structure and bearish structure. And I'm going to give you 2 characteristics that you look out for to be able to identify your bullish structure, for instance. Now, when you want to identify your bullish structure, the first characteristics you need to look out for is that you want to see the highs being violated. All right, you want to see the highs being violated, such as this. Okay, you want to see the highs being violated. All right, let me quickly show that to you. All right, sorry, my internet is lagging. So you want to see the highs being violated. All right, just a minute, guys. So guys, I said in a bullish structure, you want to see the highs being violated. Very, very important. All right. That's the first sign for you to know that you are bullish in the market. All right. That's the first sign. Now, the second characteristic is that in a bullish structure, you don't want to see the lows, all right, being violated, such as this. You don't want to see the lows being violated, all right. These lows must be protected if this uptrend is going to continue, all right. The lows must be protected in a bullish structure, all right. So basically what that means is that you have, in a bullish structure, you have weak highs and strong lows, all right. Weak highs and strong lows, all right. I want you to put that at the back of your mind. Once you find these characteristics I've shown to you, I've told you now you are bullish, all right. Now, you do not expect the lows in an uptrend to be violated. If for any reason at all price comes down to violate this low or this low to the downside, all right, if price violates the low to the downside, well, it indicates one of two things. The first thing that it could indicate is that the smart money or the institutions might just push price down to capture the liquidity resting below the lows before pushing price higher. And don't forget that below every low is liquidity and above every high is liquidity. I want you to understand that. All right. So that could be the first scenario. Now, the second scenario could be that market may be changing direction, but we cannot use this first break of structure, this very first break of structure here. All right. We can't use it as a trend change. We cannot confirm a trend change by just this single break of structure here, for the reason I have just told you. The institutions might just drive price down to capture the liquidity, and after that they will move price higher. All right. I want you to understand that. Okay. So now that is in a bullish structure. Now, when we get to the bearish momentum, the same rules apply, the same two characteristics. You want to see the lows being violated in a bearish structure. The lows must be violated. All right. This low must be taken out. All right. And you need to watch out for those characteristics that I'm showing to you now. All right. These lows must be taken out. Otherwise, it's not a bearish momentum. All right. So now, in a bearish market, you want to see the lows being violated and the highs protected. These highs must be protected, guys. If this downtrend is to continue, these highs must be protected. I want you to always remember that. The highs must be protected. So basically what we mean is that in a bearish momentum, you have weak lows and strong highs. Remember, in a bullish momentum, you have weak highs and strong lows. Now, in a bearish momentum, you have weak lows and strong highs. You want to trade away from the strong highs, all right, in a bearish structure. But in a bullish structure, we want to trade away from the strong lows, all right? That is about that. But let me ask you this, guys. How often do you find price? How often do you find on your chart this clean price action? As clean as this diagram I've shown to you. How often do you find that? Not so often, right? It cannot be, because the market is not perfect, and therefore the market moves in a zigzag pattern. And I'm going to show you the reality of the market, all right, just immediately after this very small diagram. Okay, let me delete that small diagram, and then let me get to this bigger diagram and show you the reality of the market. This is the reality of the market, guys. When price is moving in this zigzag pattern, this is what tends to confuse a lot of traders. But in today's video, like I said, I'm going to show you the simplest method you can use, all right, to objectively map your structure without any subjectivity or emotion, all right? Now, what you need first of all, when you get to your chart, is to look out for the 1, 2, 3 pattern, which I coined for myself. 1, 2, 3 pattern, what do I mean? Now, as you know, price moves. This leg that you see, this huge leg that went up, all right, is known as the impulse. Now, this one is the retracement and is known as correction. And this is also the impulse leg. Now, you remember that the impulse leg will always be longer than the corrective leg, all right? So what you need when you open your chart, what you need to see before you take any action on your chart is impulse, correction, impulse. That is why I name it 1, 2, 3 pattern. Impulse, correction, impulse. All right? Now, once you have identified your 1, 2, 3 pattern, what you need to do next is to focus on the major swing point. Now, let me show you the major swing point on only this one leg. Let me show you the major swing point so that you get to understand. Take a look. This is your high. This is your high in the market. Market printed a high before it dropped. All right, before this retracement, isn't it? That's your high in the market. And where is your low? This is your low here, guys. Very simple. It's a very simple concept. All that you need is horizontal lines and your eyes. You don't need any EA to be able to identify the structure of the market. You don't need any indicators. You don't need moving averages. You don't need any of these things, guys. All that you need is your horizontal line, all right, and your eyes. As simple as that. Now, this is your high. This is your low. Now, assuming all this did not happen in the market, all right, assuming it didn't happen, you only saw this one leg that went up, printed a high, and then came back down to print a low, all right? Now, at this point, you know, when it printed this high and printed this low here, at this point, we're assuming nothing like this happened. At that point, we saw this movement of price. Now, when price is here, it's not giving us any direction. So you wait. Why do you want to wait? You want to wait to see what will happen at this your swing high or this your swing low. If price goes up to take out this high and create a new higher high, that means that you are bullish. All right? But if price comes down without breaking this high, all right, if this price comes down to break and close below this low, well, it signals one of two things. It could be liquidity grab, like I told you, or it could be a change of direction. But that one break of structure does not confirm a change of direction. I want you to understand that very well. And therefore, you wait. Whatever goes on in between your high, this your high, and this your low, is simply noise. I want you to understand. If when you want to map your structure, you don't concentrate on what goes on in between your swing high and your swing low. You don't concentrate on what goes on there. What goes on in between is simply noise, or if you like, minor structure. That's what you have. Or if you like, complex pullback. All right? So your focus to understand your structure should be on your major swing point, which is this swing high and this swing low here. Now, as you can see, price went up and violated this swing high to form a new higher high. All right? Now, immediately you find that it has formed a new higher high. All right? You move your structure. Move your structure to that high. That becomes your new high. All right? And now, where is your low? Your low is the lowest low that produced the higher high. I come again. Your low is the lowest low that gave rise to the higher high. All right? And here is that your low. So you now move your horizontal line to that new low. As simple as that, guys. As simple as that. Now, as it is now a confirmed bullish trend. You have your 1, 2, 3 pattern. It's a confirmed bullish trend. So this is your new high and this is your new low. So what do? When you want to map structure, you do not bother yourself about what goes on in between. Because why traders are losing their accounts in the market in terms of structure mapping? Because if you get your structure wrong, every other concept you will apply to it will be wrong. All right, your structure is king. The structure of the market is king. It's not negotiable. It's king. All right. Now, what happens to so many traders is that when they see price doing something like this, printing a low, lower high, lower low, they will conclude that price has violated structure here, that we are going bearish. We are not going bearish, my friends. This is your major swing point, your high, and this is your major swing low. All right, this is your major swing low. All right, if price breaks and closes above this high, it indicates to you that this uptrend is continuing. But if price comes down to break and close below this low, it signals one of those two things I've discussed with you before, and I'm not going to repeat myself. All right, now as you can see, price went and violated the structure to the upside. All right, creating a new swing high. Now let me just sound this note of warning. Before you can move your horizontal line to that your new swing high, you must ensure that your swing high is a valid swing high. All right, and that's why I told you that in this video we are going to lay only the foundation for market structure. By the time we get to part 2, which is next week, all right, you are going to know a lot more things about structure. You are going to know how to determine your swing high, your valid swing high, or your valid swing low. You are also going to know how to determine your retracement. All right, how do you determine a valid retracement? You are going to know. All right, but all I need is for you to stick with us here. Okay, subscribe to this channel, and then you will have a wow moment with us. All right, so this is your new high, this is your new low. Everything that you see here is complex pullback. It's simply noise. All right, so you ignore whatever that is going on here if you want to map your structure professionally. All right, without any subjectivity. Now, as you can see, price went up to violate this high again. All right, meaning that this bullish structure is continuing. Immediately you see your correct swing high like that, you move your horizontal line to that swing high. All right, and where is your swing low? I've told you your swing low is the lowest low that gave rise to a higher high in the case of a bullish structure. In the case of a bearish structure, it is your highest high that gave rise, all right, to the lower low. All right, now in this case, this is your lowest low. All right, so you move this your horizontal line now to this your low here. This becomes your new low, and this becomes your new high. All right, now when you have done that, whatever goes on inside here is noise. You don't pay attention to it if you are mapping your structure. All right, because as you can see, you see high, higher low, higher high, higher low. A lot of traders will think we are going bullish from here. We are not going bullish from here, guys. This structure breaks that we're marking here is simply, all right, a minor structure break. For instance, you will find traders marking something like this. They will say there is a break of structure here. All right, they will say there is a break of structure here. Okay, now if they mark that as their break of structure, do you know what they will end up doing? Because they said there is a break of structure here, so they will place their they will find their OB here, all right, and place their orders here to go to buy the market here. Now take a look at what market has done now. Market came and violated this their OB, all right, to the downside, because this actually was not the valid break of structure that you needed in the market. All right, this is why traders are blowing up their accounts every day. This structure here is known as minor structure. It's complex pullback. Where you focus your attention is this your major swing high, and this your major swing low. That's why as a beginner, this your horizontal line is very crucial, because it will guide you on where you are in the market. All right, now as you can see, price violated this high again to form a new higher high, meaning that this uptrend is continuing. All right, as long as price has not come to violate the lows, you know that this uptrend is continuing. So once you see your valid high, you move your horizontal line to that high. Can you see that? And where is your low? This is your low, guys. All right. So you move your horizontal line to your low. So this is your new high. This is your new low. Okay. Very easy. All right. You remove the emotions in the market. Now, as you can see, all this is noise. You are not concerned about with this. All right. Now, take a look. Price went up again to violate this high to form a new higher high, indicating that this uptrend is still continuing. So what do? You move your horizontal line to that new high. All right. Where is your low? Your valid low is the lowest low that gave rise to this higher high. All right. So this is your new low now, guys. As simple as that. Can you see how we are following the structure? Now, this is your most current significant low, and this is your current high. All right. Whatever that happens here is noise, guys. All right. You are waiting for this low to be violated or for this high to be violated. Now, as you can see, the high, the price didn't go up again to violate this high. Rather, price started coming down. All right. Price now violated this low. Now, let me say this one. When price is inside this, between your high and your low, a lot of traders will believe that price was going bearish within here. And so they will map their structure here. They will map it again here, believing that price is going bearish. All right. Now, take a look, guys. Price is not going bearish. Okay. Price is not going bearish just yet. When price will go bearish is if it violates this low to the downside and closes below it. And then we now have another break of structure. All right. Before you can say we are now bearish. But for now, if price is within this your swing high and this your swing low, we are still bullish. Technically, we are still bullish. All right. So you need to wait for your major swing point to be taken before you can determine what next to do in the market. All right. And as you can see, price came and violated this low to the downside. Violated this low. Can you see that? And create a new lower low. This low is lower when compared to this low. So it has changed the scenario here now. All right. But this first break of structure is not a confirmation of a trend change. And therefore, immediately you see that break, you move your horizontal line to that break. All right. So where is the low that gave rise to this? Where is the high that gave rise to this lower low that took out this structure low here? It is this high, guy. It is this high. As simple as that. It is this high. Now, as you can see, price went up, retraced, and came back down to take out this low the second time. All right. Once you find that second break of structure, it shows to you that price is bearish now. So you move your horizontal line to that point. So right now at this point, price is bearish, meaning that this uptrend is over. We are now in a bearish structure. All right. So now this is your new low. Where is the high that gave rise to this new low? It is this high, guy. It is this high. So move your horizontal line to this high here. As simple as that. We are now bearish. All right. As simple as that. This is your high and this is your low. All right. And price retraced and came back down to violate this structure. Immediately it violates this structure. If you have a valid swing high, low here, then you need to move your horizontal line. Remember I said valid swing low. You move your horizontal line to this low. And where is the high that gave rise to this low? It is this high here. So you move your horizontal line to this high here, guys. As simple as that. Can you see that? Very simple. This is the way you map your structure in the market without any emotion. Now, with that being said, let me quickly show you some examples on the chart. All right. I don't intend to make this video too long. It is already too long. All right. Let's delete this. Now, let's start from here, for instance. Let me see. Yes, we can start from here. All right. As you can see, price has violated structure here to the downside. There's a violation of structure here. Let's see. Yes, price has violated this structure to the downside. Can you see that, guys? That's a violation of break of structure. That's a violation of structure. That's a break of structure. And where is the the high that gave rise to this low here. As you can see, it is this high here. Let me expand the chart so that you can see what I mean. Okay, so this is your break of structure, but candle body close. All right, we don't regard a weak break as a break of structure. We want to see a candle body close, and as you can see, this candle closed below this low. So this is your valid break of structure. But where is the high that gave rise to that break of that gave rise to that low? This is the structure here, guys. I want you to understand. This is the structure. All right, that's the structure. And let me say something here, guys. This is not your chalk. A lot of traders are making the mistake by marking break of structure as chalk. It's not chalk, guys. This is just a break of structure. When we get to the topic of chalk, I will then tell you, I will show you what other traders are doing wrong about chalk. Okay, now, so that is your break of structure. Okay, so price created this high. All right, after that break of structure, remember, this is your first break of structure. So this does not indicate that we are bullish now. No, you need a double break of structure to confirm that. But as you can see here, this structure, all right, remember, this structure here merely took out the wick. The wick merely took out the structure here. All right, we don't regard this as a break of structure. This is liquidity sweep. All right, this is liquidity sweep. As you can see, price broke the structure and closed below it. It's known as liquidity sweep. This is not a break of structure. Where you now have a valid break of structure, guys, is this. You need a candle body close above a high or low before you can determine that it's a valid break of structure. So this is your valid break of structure here. All right, now this has met our two rules, the double break of structure. All right, first break here, second break here. All right, now where is your high? When you have identified your break of structure, where is your high? This is your high here, guys. Very simple. This is your high. Let me show it to you. Here is your high. Okay, now I need to zoom out to be able to get this right. Okay, so that's your high, guy. And then where is your low? Your low is the lowest low that gave rise to that higher high. All right, and that's your low. All right, can you see that, guys? Simple as that. That's your low. And as you can see, you do not need to do anything about what is going on here. You don't concentrate on what is going on here when you are mapping structure. All you do is to focus on this, your major swing point, this swing high and this swing low. If price breaks above, then you know we are continuing. Sorry, guys. Yes, you know we are continuing in this bullish structure. All right, now as you can see, price has violated this swing high here to the upside. So where is your new high, guys? Let me tell you, this is not your new high. Don't mark this as your new high. It's not. Now this is your new high. All right, that's why I said by next week we'll be able to understand how you determine your valid pullback. All right, so this is your new high. And where is your low, guys? Where is your low? Now remember, our former high was here. All right, and this is the low that this high has produced, and therefore the low that gave rise to this higher high is this low here. All right, so you move this, your horizontal line, move it to this new low. This is your low now, guys, and this is your high in the market. This is your low. Okay, this structure mapping I'm showing to you is the kindergarten type of structure mapping that I'm showing to you. By next week, your eyes will be more open, and then you will be able to understand how to map your structure correctly and professionally. All right, now let's continue. Price has violated this swing high to the upside. All right, take a look at it. This is your new high. All right, because a candle body closed above this high, so you move your horizontal line. But remember, like I told you, What I'm marking now is just to lay the foundation. It's not the true SMC structure. All right? It's not the true SMC structure. Now, where is your